All right, here in chapter 7, we are talking about preparing an income statement. So, we are going to prepare an income statement for a small business, service business, and we're going to talk a little bit about financial ratios using income statement amounts. Keeping those financial ratios, I might add, somewhat simple at this point, if you like. Now, in this particular lesson, we're going to be bouncing back and forth just a little bit with the textbook. So be ready with, I'm in week 18. This is 21-22 Google Classroom and lesson 7-1, preparing an income statement, the textbook section for that. So I'm going to fire that up here really quick here. Bring your attention to the section here on reporting financial information. All right. So you will want to read through this particular section where it describes financial accounting and managerial accounting. And then this concept of full disclosure. The three financial statements we're going to prepare in this chapter: income statement, a statement of owner's equity, and a balance sheet. All right, definitions of those. And then this whole concept of going concern. Now, I'm not going to read those verbatim right now. I would ask you to go through and read that section, pause the video, read that section on reporting financial information before we move on. Okay? All right. So we talk about reporting financial information. First of all, the area of accounting that focuses on external users is financial accounting. And external users can be all kinds of people. That could be bankers, creditors, people you owe money to, government agencies, customers, shareholders. I remember I had to file a daily accounts receivable statement with our bank because we were borrowing against our accounts receivable on a daily basis. We had a credit line with the bank. All right, that's financial accounting. Then managerial accounting is internal. I kind of chuckled because the book said company managers and officers. Now, the company that I worked for, a couple of companies I worked for, we had full disclosure and we included our employees in on our financial statements. We wanted our employees to know each month how we were doing. We actually provided little classes for them where they could learn about how to interpret financial information. So that is managerial accounting. And again, full disclosure is with any financial statement, you are fully disclosing what happened in your business that month. You're not holding something back. All right, you're reporting it that way. And then when we talk about going concern, we're talking about, is the company going to be around tomorrow? Or are they in threat of going up? We call that the business either being dissolved or going out of business, whatever you like. Is it a going concern? All right. Is it going to continue on next month and next year? Because theoretically, you anticipate that a business will be open forever. It doesn't always happen that way, of course, but that's your assumption from a financial statement standpoint. When we prepare information for an income statement, we're starting with our worksheet, which we covered in our last chapter. And here's our information from our worksheet. And what we're doing here with an income statement, we're creating something. Again, this is for a service business, in this case, a web design business. Very similar to way back in chapter 1 when we created a net worth statement for an individual, which was a very basic financial statement. This one is maybe a little bit like level 2 of financial statements, if you like. All right. So here we go, preparing an income statement. And again, this information is being derived from the worksheet, our account titles, our debit and credit amounts. All right. However, well, yeah, there you go. That's coming from the worksheet, income statement columns. And again, I have to emphasize, going back to, again, something we talked about in previous chapters, and that was the whole matching principle, the concept of matching expenses to the revenues that were earned that period. We also call that accrual basis accounting, where we record the expense or we record the revenue, regardless of whether we've actually paid the cash or actually received the cash for the revenue. Accrual basis, matching expenses with revenue over time. When we get to the heading of an income statement, this is where we have to get off to a good start. All right. And again, we are answering the questions who, what, and when in the heading of our income statement or whatever our financial statement is going to be. All right. So we're going to have Delgado Web Services is the who. The what is, this is an income statement. And this is for month ended January 31, 2000, fill in the blank. All right. And notice that our fiscal period here is 1 month. And you're probably wondering, why does a business do a financial statement every month? Well, what if you were making money and you didn't know until the end of the year how much money you were going to make? You'd be a little nervous and kind of wary, like, I don't have any idea what's going to happen until the very end of the year. Well, in reality, that's not what a business does. They want to find out every month how they're doing so they can adjust and change and improve various areas, correct? So there's our heading of our income statement. And again, an income statement reports financial information over a specific period of time. It's a very important concept. All right. So there's our who, our what, and our when. Center the date of the report on the third line. Notice that everything is centered. We're talking about perfect formatting. Again, an electronic income statement will have this automated. All right. And here we come with revenues, expenses, and net income sections of an income statement. So the first section, again, is the header. And the other three sections are revenue, expenses, and either net income if our revenue is greater than our expenses, which is our goal. We want to make money. Or net loss would be if our expenses are greater than our revenues or sales amounts here. Now, understand, notice there aren't any debit or credits on this particular statement. We're using the good old accounting ruled paper, but there are no debits and credits here. All right. We've got expenses in one column. We have sales in another column. We have a subtotal for total expenses. We don't want to necessarily consider this to be debit or credit amounts. It's not really happening here. All right. And again, this information is coming from the income statement portion of the worksheet. There's our revenue, our account title. Notice how the account title is indented. All of the account titles are indented for easier reading in our income statement. And there's the revenue amount, our expenses. There's the title, the heading, expenses. We list all of our account titles for any relevant expenses for that period. There's the amounts of our expenses, single rule. Total expenses is our label down there. We write in our total expenses. Notice how that's a subtotal, 2658, adding up all the expenses. And finally, we calculate net income, our revenues or sales amount less our total expenses. In this case, we had net income of $3,162. And then we double rule, single rule below that, and then net income and double rule. Or record net income, then double rule. Okay, that's a lot of steps. 14 steps. Woo! Wow. All right. And generally, if you're creating one of these, you'd be working from kind of a template from the previous month. So make sure you're consistent in your reporting from 1 month to the next. All right. Also, I just want to point out too that negative numbers, or if your expenses are greater than your sales amount or your revenue, you want to show negative numbers in parentheses, not necessarily with a minus sign, but parentheses. You want it to be very obvious if you have a negative number. All right. Okay. Continuing on, analyzing an income statement. The comparison between two components of financial information is called a financial ratio. So debt to equity. How much is my debt? How much is my accounts payable versus my capital account? Debt to equity. What's another one? The quick ratio is another one. Quick ratio would be your total assets and your total liabilities, another ratio. So we use financial ratios for all kinds of different purposes. And here's where we might want to break just for a second here. And let's go to the section titled Analyzing, excuse me, an income statement. We might want to read through this section briefly before we get too far into the terms, I should say. All right. And so I suggest you read the section down here, which talks about total expenses, total revenues, and then the financial ratios, ratio analysis, and vertical analysis. All right. And then quickly, like, what are acceptable financial ratios? What does that even mean? Okay, read through that. Here is our total expenses ratio, our net income ratio, and we also call that a return on sales. So you can read through, if you would please take a moment, read through the Analyzing an Income Statement section of Chapter 7.1 in your MindTap book. All right. And let's pop back into our presentation here. Whoops. Let's go back over here. Calculation and interpretation of a financial ratio is called ratio analysis. So first we create the ratio, then we have ratio analysis. Then we have this thing called vertical analysis. We're going down the line and we can assign a percentage to all of our expenses, for example. What percent are all of our expenses to total sales as a percentage of sales? To kind of see from one month to the next, what area of expenses is gobbling up most of our attention or most of our net income, and maybe what's something we could adjust or change or fix. All right, so some things to think about. So vertical analysis, and we'll kind of play with that a little bit here as we move forward in our calculations. So here you have an example of your income statement, and off here to the right you have a percentage of sales. So your denominator, the bottom end of your ratio, is going to be sales. The numerator is going to be a variety of factors. In this case, we're actually using sales here as both a numerator and a denominator, which makes it 100%. Then we're taking total expenses as our numerator, 2658, and dividing them by 5820 to come up with that ratio, 45.7. Then we have net income, numerator, divided by our denominator, 5820, come up with a net income percentage of sales of 54.3. Well, here they just illustrated that. Thank you so much. There's our total expenses ratio, and there's our net income ratio. All right. This would also help compare our business to potentially to other businesses. All right. And just for starters, a business should begin by looking at their ratios, expense ratio, net income ratio, and so on, and compare it to other fiscal periods, other months, for example. That'd probably be the best thing to start out with is, first of all, do an internal check against your performance over time. And understand, too, that many companies, particularly corporations, publish these ratios and all of their financial information because if they trade stock, if they sell their stock publicly, they have to publicly produce their financial information. And there is a database called Edgar, EDGAR, where they post all of their income statements. You can go there and look up, hey, what was the income statement for Microsoft for last month? You can find it. It's called a quarterly one would be a 10Q, an annual one would be a 10K. That'd be every 3 months. All right. Okay. What happens when we have an income statement with two sources of revenue and a net loss? All right. Well, now we have revenue titles, revenue amounts. In this case, we sold riding mowers and push mowers. And it says sales, but it says repair it now. I would think that another source of revenue would be like mower repair or weed eater repair or something like that. But they don't show that. They're just selling mowers. But the name of their company is Repair It Now. I'll just pretend like there should be another revenue item in there called like mower repairs. There was a service that we do. Okay. Total revenue. In this case is 21,200. There's the label total revenue. Net loss, record net loss. So our expenses of 24,127 were greater than our income of 21,200. We had a net loss of 2,927. And you could look at this and go, well, was equipment rental expense, was that higher than normal? Did we spend an excessive amount on advertising? What's up with supplies expense? Why is supplies expense $8,400? Okay. All right. Maybe I need to look and read a thing about Repair It Now. I don't totally understand that. But anyway. All right. And again, total expenses exceeded total revenues. We ended up with a net loss. So, audit your understanding. The first four sections of an income statement. Can you remember those? The heading, the revenue section, the expenses section, and either the net income or loss section. Okay, heading, revenue, expenses, net income, net loss. Okay, four main areas. We'll practice this in a moment. What is the formula for calculating the total expenses ratio? What's our numerator? What's our denominator? Total expenses divided by total sales is your total expenses ratio. Again, total sales is our denominator, the bottom part of our equation. And of course, net income ratio would be net income divided by total sales. As you move through time and your business grows, it would be hoped that your net income ratio would slightly increase and you become more profitable. That would be your goal. Okay. All right. Let's go to MindTap. Let me close out of this. And working papers 7-1. And you can pull this up with me. We're going to do the work together section. Work together. All right. And here we have Hair Care Salon. It's completed its worksheet, is now ready to prepare the income statement. The first step in preparing an income statement is the heading. Fill in the blanks for each row of the income statement heading for Hair Care Salon for May 31 of the current year. Enter the current year as 20, blah, blah, blah. Do not abbreviate the month. Okay, so who Hair Care Salon? What income statement? When? For month ended May 31, comma space 20 dash dash, as they asked me to do. There's my heading of my income statement. Who, what, when. Grade step 1. Perfect. Next step. Okay. Then for each account that appears in the income statement, indicate the section in which it would appear. For any account that does not appear on the income statement, select neither. Again, income statement is going to be all those items that's below your equity section. For a while there, we were kind of considering it as a subgroup of equity. Now we're kind of saying it's an income statement area. Cash, no. Anything, assets, no. Liabilities, no. Owner's equity, no, and no. Even the income summary is not going to be part of your income statement. Okay, that's going to be, we're going to roll everything up into the income summary here at the end, but for now we're going to say no. Sales obviously is revenue, and everything else is obviously expenses on our income statement. How'd we do? That was pretty easy, wasn't it? Grade step 2. All right, next step. Income statement analysis. Here is our worksheet that we prepared, and we're going to use that information to derive our income statement. So we're going to come down here. Sales was 5,800. Advertising expense, I might pick these off in pairs. 750. Cash short and over 3. Or you know what else I can do? I can probably, I don't want to pin that. That's going to be kind of weird. 610 and 167. That's insurance expense. Miscellaneous. And 540 for supplies, 300 for utilities. Now here is the temptation. The temptation would be, oh, I'm just going to go back up and grab the total. Well, what if you made a mistake? What if you screwed up? All right. Well, that does happen, does it not? Sure, it does. All right. So I'm going to come down here and go, okay, let's add those up. Equals 750 plus 3 plus 610 plus 167 plus 540 plus 300. Enter. 2370. Does that match my total for my worksheet? That may seem really redundant to you, but again, it's just a cross check. You always want to be redundant and cross check with your accounting information. 2370 was my total expenses. Total revenues 5,800. Cross check that. That looks good. Grade step 3. Okay, very good. Next step. Calculate net income, net loss. My revenue is greater than my expenses. I'm going to come down here and say, okay. Once again, I'll use my worksheet as a cross check. I'm going to say equals 5,800 is my revenues minus 2370, my expenses 3430. We don't have access to the income statement or the worksheet anymore, do we? No, we don't. So it looks like 3430 is going to be my net income. Make sure you say net income, income greater than expenses, 3430. Grade step 4. 1 out of 1. I'm getting there. Next step. Calculate and record the ratios for sales, total expenses, and net income. Well, I think if we have 5,800 on the top and 5,800 on the bottom, I'm pretty sure you can see that's going to be 100%. Now here, I'm going to use Excel, 2370. You know what, just for illustration's sake, here is my sales. Hold on a second here. I'm going to do a format painter. Okay. My sales is 5,800. So first of all, my total expenses were 2370. What is the ratio? It's going to be my total expenses, and I'm just using Excel here, divided by my total revenues. Now that says 40.8621. And I think I'm rounding to, it says round to the nearest 0.1%. So I'm going to be a good boy here and go percentage and 1%. So I've got 40.9% is my ratio of expenses to sales. Then this, my net income divided by my total revenue. And I'm just going to, here's a little trick here, format painter. So that's going to be rounded to the nearest 0.1%. It's going to be 59.1. That's a pretty profitable business. That means that more than half the money that you make is ending up in your pocket as profit. That's pretty lucrative. Grocery stores is like 4 or 5%. It's terrible. 59.1, 40.9. All right. Did I do good? I did good. Save and continue. I got total score 8 out of 8. All right. So from here, you're going to continue on working on the on your own section along those same lines, and then completing the terms review assignment for lesson 7.1. Please drop a note to me if you have any questions about this lesson. Take care. Great day.